Frank?
Listening to Chris and Barry and Kathy, we have all levels of the spectrum here. If you're a young person, you want to lower your credit card interest rate, there's an answer here. If you're a company and you need some capital, a couple $1,000, couple 100,000, sounds like you can go to Barry or you can go to Kathy and solve those problems. And then once you get established, you go further down the road, and here's a firm like Chatham Capital, a mezzanine lender, who then will also overlay, as I said earlier, the expertise that many businesses need and the platform and contacts that's going to take them to a whole different level. That's one thing that as an entrepreneur and as a growing entity, that's probably the secret ingredient that everybody realizes once they get to be that success. That's what got them there. There was really good advisors along the way and good partners, whether it was someone that started out financing you or someone that took you to a different level.
So the mezzanine side of the business over the last 2 to 3 years has been somewhat challenged, especially on the real estate side. I'm not sure about your industry, but you may want to, and not underestimating the sophistication of this audience, you may want to explain a little bit about the capital stack and how the mezzanine portion of it places with respect to someone that wants to fund a company.
Why don't we put up slide 43? So this is an actual case study of a firm that we financed, and you can see, you're taking the company to the next level, taking their EBITDA from a less than 5 million, 3.5, to within a little more than 24 months here, where they're over about 20 million. So, and that just doesn't happen overnight. That happens with providing the capital. They obviously having a vision and a use of the capital that's going to work, and then turning that into a win like this. The market, different than the real estate market, the lower middle market for businesses here in the U.S. You got to see what's happened over the last 3 years in America. We've gone through one of the deepest, darkest periods for business that America's ever seen. So if you're a small business, a medium-sized business, and you've survived these last couple of years, you probably right now have great target acquisitions that you can make, or places that you can grow into to pick up customers and add profits. So that's really what's been going on at Chatham over the last couple of years, where we've had time after time, firms coming in, and the money that you're borrowing from a firm like Chatham, mezzanine firm, is not something you got to hold on to for 10 or 20 years. This is lending that the duration of it is of a short duration, 24, 36, 60 months. And obviously the company is incentivized to pay back that loan and move on, because the loan is of a higher interest rate than if someone goes in with a stack of assets and collateral to borrow money from a commercial bank. This is more making an investment in the management and the cash flow of the business, and looking at the strength of their customer base and the industry.
So if we were looking at over the last 24 to 36 months, you guys have, while looking for opportunities, have pretty much been on the sidelines saying, wait a minute, let's wait and get a feel for what's going on from a valuation perspective as far as the companies are concerned. Is that pretty safe to say? Actually,
Ken, it's exactly the opposite.
Really?
I know you come from the real estate side.
That's why I'm asking.
That's, I think, a little bit of the mindset that when I was on the investment side at the state treasury, we didn't invest in any real estate over the last 2008, 2009, 2010. But when you're talking about a middle market small business in the U.S. right now, they've made it through the storm. They have probably, many of their competitors have fallen by the wayside, or they're on their knees right now. And the stronger businesses, if they can get their hands on capital, they can make targeted acquisitions, bolt-on acquisitions. They're going to bode very well for them as they continue in their.
In your average size deal that you're looking for, that's your sweet spot?
The average loan or check that we're writing to a middle market business is somewhere between 5 million, 15 million. We can go as high as 40 million. We just deployed 40 million as a add-on investment to a firm. You may have heard of Mood Media or Muzak. You go in any restaurant in America, the music that's playing is probably through a firm called Muzak. And Mood Media, if you go in any mall in the country and you go in those stores where they have like a nice smell in the store, and they have video screens playing, and maybe they have a special on white denim jeans on a day, and you go in there, and these companies have tied into the psyche of Americans, but also and internationally. But also they tie into the inventories of the store. So when the white jeans are selling out, they switch the video. So instead of seeing Beyonce in the white jeans, you see Beyonce in the red jeans, and then that helps the profitability and the inventory flow.
So we can blame you for that Muzak?
So we're investing in companies like that, where we were in them early on. We were in them previous to now, where they're making targeted acquisitions and they're becoming a global brand. And our initial investment would have been in the 15 million range in the old days, which would have been a couple of years ago. And now things are moving so quickly, and we re-up and we're 40 million into the new deal. And those are very good positions to be in, because you know the management now very well, you know the industry very well, and you really can deploy the investors' money that you have in a very high profitability way. And that's, like I said, over a 10-year history of the firm, 17% year-on-year profits, and that's through the recession and the internet bubble burst in the early part of the decade, and 2008 S&P down close to 40%, and a firm like ours up 12% that year.